Can you hear me, Giles?
Yes, I can hear you now.
Okay, so I have the slides now. So would you like me to share them with you?
Yes, yes.
Okay.
Yes.
So would you like to start? Once again, I want to apologize to everyone for the slight technical problem which we had. I just have now the slides for Giles, so we can start.
Yes, thank you very much, Eva, and good evening to all of you. Welcome to the IFA Ghana chapter online CPD program. Today, our time is already spent. We have 2 minutes already into our time. We have a very important discussion to have today. Right from the beginning of this year, there has been several changes to our tax provisions and other provisions with regards to the legalities of tax in the country. And we find it very important to update all of us on the current tax positions and changes that has been made so far and the way forward. I think this is an opportunity for all of us to get ourselves abreast and know the way forward. Whilst we are having this session, I will advise that if you have any question, we will take the Q&A after the presentation. You can locate the Q&A under the screen. You type in your question and then we read to the presenter to present. Today we have with us Julius Jima. Julius is an IFA member and a member of the IPA. He's also a council member representing on the Chartered Institute of Tax Ghana. He has been on several panels where such discussions are, and then it's a very, very important and a happy moment for all of us to have Julius today to update all of us on our tax issues. Let me acknowledge our colleagues from IFA who have joined from Manchester, UAE, and other parts of the world. Thank you very much, and then enjoy your stay with us. Julius.
Okay, thank you very much, Christian, and then Eva. A very good afternoon here in Ghana, and then I welcome all of us to our meeting today. Our meeting is focusing on the recent tax updates in Ghana. As accountant, what we have to know concerning taxes in Ghana. So we have our slides, and then there are a lot of things that we are supposed to go through, but we'll summarize it and then we'll be able to advance our CPD or our session with the taxes in Ghana. With the overview, the whole presentation is going to focus about the introduction to taxation, which we are all aware, and then I will be looking at as accountant for SMEs, we'll be looking at how SMEs or sole proprietorship businesses or individuals will be able to account for their taxes. We'll also be looking at the outlook of Ghana's economy, and then which led to the recent, tax introduction or imposition, which is currently the E-Levy in Ghana. So without much ado, I would want to begin my presentation to first of all look at the introduction to taxation. So as we begin the presentation, I would want to introduce us to what is taxation. And then as we are all aware, a tax. Hello, Eva, can you hear me?
Yes, I can hear you.
You are audible, yeah.
All right, thank you very much. I need to confirm. So tax is just a compulsory financial charge or any levy imposed by a government organization in order to fund its spending or public expenditure. Tax goes with tax compliance. So tax compliance is a situation whereby there are procedures or protocols that a taxpayer must follow to be able to compute for the right amount of taxes and file and pay to the government organization. So taxation is just any amount imposed by government, and then tax is also law. So it's a creation of statute, something that we must all comply. But can we move on? Yeah, so the two main tax types that we have is direct taxation and then indirect taxation. So having introduced the concept of taxation, we just want to focus on direct taxation. Direct taxation is a situation whereby the obligation or the burden of tax cannot be shifted to a taxpayer or to a final consumer. So with direct taxation, individuals have to bear the tax obligation. Unlike the indirect taxation, you are that one, the burden of tax can be shifted to the final consumer. So the key difference here that I want to note is that direct taxation is when the obligation of the tax cannot be shifted, whereas with indirect taxation, the obligation of the taxes can be shifted on or can be passed on to a final consumer. There is also a little bit of history when taxation began, and then I'll share the slides. So those ones are for reading. Let's move on so that we're able to save the time. Yeah, so I've already talked about the direct taxation, so we can move on. Yeah, so there are some examples of taxes in Ghana. Like I said, I introduced us to a direct taxation and then an indirect taxation. With the direct taxation, where the burden of the tax cannot be shifted. So you are supposed to bear the taxes yourself. Number one example or number one tax type or tax kind is personal income tax. There's also employee income tax. There's also corporate income tax. And then the most key tax in Ghana, which is the electronic transaction levy. We'll look at it at our latter part of our discussion. So these are some of the examples of the direct taxes, which is income from persons, income from employees. We have corporate income tax, which is also as business taxes. And final one, which I have captured there as the E-Levy. Let's move on. Yeah, so these are some of the examples of an indirect taxes we have in Ghana. So we have VAT, which is value added tax. There's GET fund, there is NHI health, that is National Health and Insurance Levy. There's CST, which is communication service tax. There's custom duty. There's excise duty. There's ESLA, which is Energy Sector Levy Act. Then there's import duty, special imports levy, African Union imports levy, ECOWAS levy, export and import levy, and then administrative charges. Once we advance our tax series, we'll have time to talk about these taxes. But for purposes of our discussion today, is a teaser. So we are just looking at some of the tax types. But as we get opportunity to do our series, we'll be picking them one by one, and then we'll be looking at the scope of the law and then how it is being applied here in Ghana. But for now, I'm just citing these as some of the examples of an indirect taxes that we have in Ghana. The key among one is the value added tax, which maybe later in our discussions, as we advance our series, we'll be able to have time to talk about it. Let's move on. Yeah, so we are looking at what benefit does tax brings to, a country or to the government. So some of them generating resources, that is revenue mobilization. So in this case, one of the key reasons why government imposes taxes to mobilize some money. And then as we earlier on defined taxes, then government to be able to have the money to be able to carry out its spending activities or even to fund public expenditure. As we know, government do not work. What government actually does is that it's supposed to create that enabling environment for businesses and for individuals to thrive. When businesses and individuals are thriving and they are making money in the economy, then government can get some money back from the system through the imposition of taxes. There is a social contract that government also have. That is, once those monies are mobilized, then there should be some provision of public resources like healthcare, education, infrastructure, construction of roads and schools and all that to be able to compensate for the monies that the citizenry is contributing to government by way of taxes. So the key benefit of taxation for government, which is the bloodline of or the lifeline for government resources, is taxation, and here lies represented as generating resources, which is money. Another benefit of taxation is equity and growth. So here government is looking at taxing high-end people, or progressive taxes. That is where individuals who make more in the system, government tax them to be able to create some form of amenities or resources for the poor in the society. So that is with the equity and then the growth. So these are some of the benefits that taxes does to a country, creating resources or mobilizing funds for the country. There's also some growth, and then a social contract where I explained the fact that when the monies are being mobilized or we contribute the money to government, there should be some corresponding provision of certain amenities to the public. That is, government providing some form of services to the public. So it is just a two-edged sword that we pay and then we're able to enjoy some services from the government as well. So let's move on. Yeah, so let's move on. These are just some explanation to the benefits of tax. So keep going. Okay, so yes, so let me come back. Yeah, so we want to talk about measures that government should put in place to realize the benefits, measures that the government should put in place to realize the benefits of taxation. So our next slide. Yeah, so here, the first one that government must do is that an effective tax system should be fair. You want to get money from your people, so you should be able to be fair in getting the money back by way of generating revenue or mobilizing resources. So one of the key characteristics of an effective tax system is that there should be fair, there should be equity in the collection of the taxes. And when we talk about fairness or equity, we have two key indicators, which is the horizontal equity and then the vertical equity. Horizontal equity means that taxpayers in the same financial condition should pay the similar amount of tax. So as you put the ladder, vertical and then horizontal. So if you are earning more, you should pay more. If you are earning less, you pay the corresponding amount of taxes. So people in the ladder who are making more money should be able to contribute more, or the tax system should be designed in a way that the higher income that you earn, the more taxes you pay. With the vertical characterize all people or classify all people in the same income earning capacity to be able to pay taxes so that they are not worse off. So the vertical means that taxpayers who are better off should pay at least the same proportion of income taxes as those who are less well off. So the key thing is that the tax system should be fair. And with the fairness, we are talking about equity. With equity, we are looking at horizontal and vertical equity. With horizontal, people who earn more should pay more taxes. And then with a vertical, people in the same income earning capacity should pay the same taxes. Let's move on. Yeah, so another key thing that we want to look at is we've been hearing about progressive tax, regressive tax. So what is regressive tax? A tax is regressive if those with low income pay a larger share of income in taxes than those with the higher income. So as it clearly explains it, there shouldn't be a situation whereby those who are earning less are paying more taxes. If that happens, then it is regressive. Taxes should always be progressive. So the reverse of the regressive is progressive. When government is designing taxes, what they have to consider is that the impact of the tax should not affect the poor. If the impact or the incidence of the tax is affecting the poor that much, that means that the tax is regressive and it can lead to so many things. We see most of regressive taxes in indirect taxes, that is consumption taxes, and the key tax there is VAT. So anytime government is touching indirect taxes or VAT, then it's going to affect the poor, because in the end, with indirect taxes, the burden of the obligation of tax is transferred to the final consumer. So when government goes to touch an indirect taxes or VAT, which is going to affect the final consumer, then it becomes more regressive. So that is why you see people talk about it and then try to make sure that government will not introduce a regressive taxes. But with progressive, it means that those who are making the income are, subjected to pay more taxes, so that government, it will mitigate, the revenue shortfall that the government is looking for. So one of the key things that government must do or to consider the most is trying to impose taxes that is not regressive, that is going to affect the ordinary citizen or the poor people in our society. So let's move on. Yeah, let's move on. So the reverse, so let's move on. The slides will be available, so we'll be looking at all those things. These are just to introduce us. So as we talked about fairness, one of the key things that we also looking at is adequacy of the tax. So here is defined as the tax must provide enough revenue to meet the basic needs of society. If you impose taxes and then even the collection of the taxes, the cost you incur in collection of the taxes is more than what you are going to receive, then it means that the tax is not enough for government to be able to meet its needs or its revenue target. So the tax that is being imposed, when you do the cost benefit analysis, the benefit should be more than the cost incurred, so that there will be that enough for government to collect and then spend and use it for public expenditure. So next. Yes, one of the key things is that tax should be simple. We don't want a complicated tax system that it is going to push taxpayers off and in the end not help them to understand the taxes and comply by way of filing and then payment. So one of the key characteristics of taxes, an effective tax system, is that it should be very simple. Everybody, you declare your income, you know what you are going to pay. Next. Yeah, so with simplicity, the next one is that taxes should be transparent. Everybody must see through the taxes and be able to pay accordingly. Let's move on. Yeah, so like I've already indicated, the administrative ease, one of the things is that the cost of collecting the taxes should not be more than, the tax that we are expecting to raise. The next one, I just want to move through the theory. Yes, so I want to introduce us to income tax. That is, as accountants, one of the key tax area or the tax type that we are focusing on is direct taxation or the income taxes. The initial presentation was on just the introduction to taxes, the definition, and then the importance of taxation and although the characteristics of an effective tax system. So we just moved to one key tax type, which is income tax. So please, can you come back for me? Yes, in Ghana, our income tax is being imposed by what we call it the Income Tax Act 2015, Act 896. That imposes all taxes on income. So our income tax law is being regulated by the Income Tax Act 2015, 896. The taxes, income tax is levied each year on the income of both resident and non-resident person. The income tax payable for each year of assessment is by a person who has a chargeable income for the year and the person who receives a final withholding payment. So before you be taxed on your income in Ghana, you must have a chargeable income or a taxable income, and I'll explain as we move on. And then also, if you receive a final withholding payment, you pay taxes. So let us move forward, look at what a chargeable income is. So an income is payable by a person by calculating or applying the relevant rate of income tax set out in the first schedule to the chargeable income of that person and deducting a foreign tax credit allowed to the person. So before you can, pay your taxes, you should have a chargeable income. And then there are certain income tax rates applicable. So once we determine your chargeable income, we pass it through this applicable rate of tax to be able to determine your income tax. Then if you have any foreign credit, that is if you have paid some taxes outside the country, it is a credit to you as a resident person in Ghana, then we can allow that in finally computing for your income tax in Ghana. So the key thing I want to introduce is that you must have a chargeable income, and then we subject your chargeable income to taxation. We'll define what a chargeable income is as we move forward. Our next slide, please. So who is a resident person? Before you can pay tax in Ghana, you must be a resident person in Ghana before you can pay tax, because tax is jurisdictional based. So a resident person, number one, is a citizen, other than a citizen who has a permanent home outside of the country and lives in that for a whole of that year. The second point is that present in the country during an aggregate period of 183 days, which is equivalent to 6 months, and also an employee or official of the government of Ghana posted abroad. And then finally, a citizen who is temporarily absent from the country for a period of no more than 365 days. So to consider you as a resident person in Ghana, you must be a citizen, you must have a permanent home in Ghana, you must have stayed in the country accumulated of 183 days or 6 months, and then also an employee of the government of Ghana, even though you've been posted abroad. So these are setting the conditions for who a resident person in Ghana, because before we tax, you must consider some of this, information. So our next point. Yes, so having defined who a resident person is, what is now, let's look at the income sources in Ghana. So like as I did indicate, we have a chargeable income. What is a chargeable income? A chargeable income of a person for a year of assessment is the total accessible income of that person for the year from employment, business, or investment, less the total amount of deduction allowed. As I indicated, if you have some tax credits outside the country, you paid some taxes outside the country, you can use that as what a foreign tax credit. The next income we want to discuss is the accessible income. So from chargeable income, there is accessible income. Accessible income is a person's income of the person for each year of assessment, which is your income from your employment, business, or investment without any deduction. So with the chargeable income, there is some deduction, but with accessible income, it is your total income from all these areas, whether you are in employment, whether you are doing your own business, or you are investing and then you are receiving some money. So our next slide. What is income from employment? So I'm just breaking down the terms from chargeable income to accessible income. So accessible income talk about all your income from employment, business, and investment. So what is income from employment? The income of an individual from employment for a year of assessment, it is all gains and profit from that individual from the employment. So any money that you are paid in the course of your employment is your income from employment, such as maybe your salaries, allowances, and the rest. So if you are in full-time employment, whatever money that your employer pays you is your income from employment. Next. Yeah, so these are some of the examples of the income. So salary, wages, leave pay, fees, commission, overtime, and the rest, all allowances. Our next slide. Yeah, so according to our Income Tax Act, which is the law imposing taxes, when we are computing for the chargeable income, there are some income that we include and there are some income that we exclude. So the income that we include in computing for our chargeable income, which I talked about, was the salaries and the rest. But this particular slide is referring us to incomes that are exempt, such as final withholding payment, a discharge or a reimbursement of an expense incurred by an individual on behalf of the employer. That serves the proper business purposes of the employer. So as an employee, if you incur certain expenses on behalf of your employer, and then it is related to the employment, that income is an exempt income. It means that we will not add it when we are computing for your chargeable income. Another one is, an income received by way of a reimbursement of medical, dental, health insurance, and the rest. There's also a provision of an accommodation by an employer who is in the business of timber mining, building, construction. So if your employer provides an accommodation for you in those business areas, farming, petroleum operations, they are exempt income. The next slide. Yeah, so as we define income from employment as all that is your profit from your employment, which is profit and gains from employment, is the same definition for business. So business is also income that is your gains and profit for a person from his business. Same for investment, all your gains and profit of that person from conducting an investing activity for a year. Our next slide. So these exempt amounts are looking at incomes of certain individuals in the country or income received in the country that do not qualify as income that is subject to tax. The first one is salaries and allowances, pension, and gratuity of the president of the country. So our president do not pay taxes. Again, income of government of Ghana, that is our local authorities, the assemblies, MMDAs, also don't pay taxes. The next one is some of our public corporations or state institutions who are not set up as a commercial venture don't also pay taxes. So all these income earned by these people or this body of persons are not subject to income tax in Ghana. The income of a cocoa farmer is also not taxable. A capital sum paid to a person as a compensation or gratuity in relation to personal injury or death is also not taxable. So these are some of the exempt incomes that we have according to our Income Tax Act. Our next slide. Yeah, so like as we were looking at incomes that, when your employer is providing certain accommodation for you, if it is in farming, construction related, it is not taxable. But let's look at quantification of benefits in kind. Before we arrive at our chargeable income, if your employer provides you with certain benefits, which is either through provision of vehicle or motor vehicle to do your work, or also provides you with an accommodation, then the law sees it as a certain benefit that you receive, but not in cash. And the law will have to quantify it and subject to taxes. So that is, this particular slide is here to introduce benefits that we receive and they are not in cash. They don't come to us through our payee or payroll system, but we receive it in the course of our employment. They are supposed to provide a house for you or rent for you. They are supposed to give you a car or a driver as part of the employment. So our next slide, please. So the first one is when you are being provided with a car, a motor vehicle, how does the law quantify it? The first is that when you are being provided with driver, with vehicle, and then with fuel, Eva, can you just come back? Yes, so we are looking at the benefits. We'll see the computation very soon so that we do away with the theory. So if you are given a driver and a vehicle with fuel, the law will quantify 12.5% of your TC, which is your total cash emolument, and subject to a maximum amount of 600 per month. If you are given a vehicle with fuel, it is 10% of your total cash emolument, and I'll explain everything. If you are given a vehicle only, it is 5%, and then fuel only 5%, but we subject it to, a certain maximum, which is 250, 250, 500, and then 600, depending on the category of benefit that they are given to you. So the next slide, please. With the accommodation, if your employer is giving you a rent facility or accommodation for that purposes, the first one is accommodation with furnishing, that is 10% of your total cash emolument. If it is only accommodation only without any furnishing, will tax you at 5% of your total cash emolument. If they only furnish the apartment for you as well, it is going to be 2.5. And then if it is a shared accommodation, also 2.5. I'm building a point, so we'll arrive at what we want to do. So next slide, please. Yes, before we arrive at your chargeable income, mind you, all the discussion on income tax, we are trying to look at our chargeable income, that is the taxable income. So salary is not only the income that we tax, or other allowances is not only income that we tax, we pass it through a certain conditions, and that is what we are looking at those areas. So there's personal reliefs as well. Before you finally arrive at your chargeable income, having computed for your basic salary, your cash allowances, you arrive at what we call your gross salary or your total cash emolument. Gross salary is the same as your total cash emolument. Then there's a benefit in kind. The benefits in kind are two: accommodation and then motor vehicle, if it is being provided by your employer. Then you arrive at what we call your accessible income. Then finally, before you get that chargeable income that we will tax, then you are supposed to deduct all these personal reliefs. So if the reliefs are marriage or responsibility, old age, child education, aged dependency, professional or vocational training, and then disability relief, the various income per year is what you get as a taxpayer you are entitled to. So for marriage responsibility, that is if you have 2 children, or if you have a spouse, a dependent spouse that is not working, you're entitled to a relief of 1,002 per year. Old age is when you are above 60 years and then you are still in active service, or you are working, or you are doing your own business, you're entitled to a relief of 1,005. Child education, that is if you have up to 3 children in any recognized Ghanaian educational institution, you are entitled to a relief on the child, that is 600 per child per year. So for the maximum, you're entitled to 1,008 per year. Aged dependency up to, that is if you have any of your parents above 60 years and they are depending on you, you can claim a relief for them. And then if you are doing a professional or a vocational training for skills development, that is if you're a member of IFA or if you are still studying for IFA, and then you can show that you are being paid, you are paying your subscriptions and your exams fees and everything, you are entitled to claim a relief of 2,000 per year. Finally, if you are disability and you're in employment, you are also entitled to a relief of 25% of your total cash emolument. Total cash emolument is just your gross salary. That is your basic salary plus all the cash allowances. Next slide. Yeah, so this is how we compute for the chargeable income, all the explanations I was giving earlier on. So this is just a recap of it. You pick your basic salary, you look at all your cash allowances, you arrive at your total cash emolument. Then there is benefit in kind. The benefits in kind are 2, motor vehicle and then accommodation. We have looked at the category of the motor vehicle benefit that is given, and then the respective rate of tax that you are supposed to apply. The next slide, please. Yeah, so you get your accessible income, then you take off your personal relief, starting from Senate, marriage, and all that we talked about before. Finally, you arrive at the chargeable income. So the chargeable income is the income that we subject to tax. Next slide, please. Yes, so these are the various income tax rates that we have in Ghana. Having computed for the chargeable income, then we pick the income. If the income is, say, maybe 10,000 per month, then we tax it through according to this rate. So the first 365 is free, followed by the next 110, which is 5%. The next 130 goes for 10%. Your next 3,000 will go for 17.5. The next 16,000 will go for 25%, and then exceeding 20,000 is being taxed at 30%. So in that order. So this is how we tax our chargeable income to determine our income tax for a particular month. We file and we pay to the GRA, and then as an individual or as an employee, this is how our income taxes is being computed. Our next slide, please. So one key thing that I want to talk about with respect to the direct taxes is overtime and then bonus. As part of our employment, we do extra hours, and then the extra hours also qualifies as a taxable income. So if you receive an overtime, the law says that we withhold tax at the total of the payment at a rate of 5% if the amount paid does not exceed 50% of your basic salary. So if you do overtime and then they pay the amount to you and your basic salary is 1,000, if the overtime amount does not exceed 50%, that is 500, we withhold tax at 5%. But what if it exceeds 50%? Then it means that you're supposed to withhold tax at a rate of 10%. So the standard is that the overtime amount should not exceed 50% of your basic salary. If it does not exceed, you withhold tax at 5%. If it exceeds, the excess goes at what? 10%. Our next slide, please. Yeah, so overtime and bonus. What does the law say on bonus? If the total bonus payment made by the employer to the employee of a year assessment does not also exceed 15% of your annual basic, you withhold tax at 5%. But if the overtime amount paid exceeds 15% of your annual basic, then you are supposed to add the excess to your chargeable income and tax them, that is using the graduated rate. So if your basic salary is 1,000, it means that your annual salary will be 12,000. So if you are being paid bonus, we compare the bonus amount to 15% of your annual basic. If it does not exceed, we tax it at 5%. But if that bonus amount exceeds 15% of your annual basic, which is the 12,000, then we add the excess of the bonus amount to your chargeable income and tax them using the graduated rate in the month in which the bonus was paid. So these are some of the things to consider when you are computing for the income taxes of employees or of an individual working in Ghana. Our next slide. Yes, so as we are just bringing our discussion to a close, like I said, we did the introduction to taxation. We are looking at one of our key tasks, which is direct taxation. And then as our topic for the day is some recent tax updates in Ghana. So our key or the very recent tax updates in Ghana is the Electronic Transaction Levy Act. So we'll just go down to that. What does it say? What tax is it about? With the history, before did that tax come into being? Let us look at Ghana's economic outlook for 2022. Ghana's economic outlook for 2022. Let us look at the key microeconomic objective that was set out by the government of Ghana through the minister responsible for finance. In the budget presentation, which was done in November 2021 for 2022 budget, the minister said that overall real GDP growth of the country, they're expecting it to hit at 5.8%. Non-oil real GDP of 5.9%, and inflation rate of 8%. And today we know where inflation is. Fiscal deficit of 7.4% of GDP, and then our primary surplus of 0.1% of GDP. Gross international reserve to cover not less than 4 months. So this was the target or the objective of our fiscals in 2022. Government was looking at growing the economy by 5.8%, GDP just represents the value of an economy or the value of goods and services of an economy in a given time of a country. So Ghana, we were looking at 5.8. Inflation was also targeted at 8%, but today inflation is 27.6%. So really, it was putting some economic burden on government. Our next slide, please. If we pick an extract of central government budget, you can see that the point number 1, total revenue and grants for 2022, government budgeted that it is going to spend about 507 billion. That was the total revenue government was anticipating. Expenditure for government was 137 billion. So the difference of 37 billion was a deficit for government. And then more often than not, when Ghana's budget is presented, it is always in deficit. But for 2022, there was a deficit for government that is 37 billion for government. I'm just giving why the E-Levy came, which is the recent tax update. Our next slide, please. Yes. So when there was that deficit of 37.7%, as a government, you must bring in some policy measures to be able to make up for that deficit. So one of the key things that they wanted to introduce to be able to make up for that deficit was the approval for the implementation of a revised exemption bill. When we go through our taxes, there are some exemptions. The exemptions I was explaining, almost all our tax kind do have some form of exemption, but there has been a bill in Parliament that, is going to deal with that exemption so that people will not be getting more exemptions that they ought to be getting by our various taxes. The second point was implementation of the unified common platform for property rate. Property rate, if you own property in Ghana, you pay some rate or you pay the property rate and business operating permit. Government was targeting at those owning properties in Ghana. And then there was a restoration of benchmark values of import by suspending the 50% discount on selected goods and services, and then 30% on vehicles. If we could cast our minds back to 2017, 2019, the Vice President was talking about benchmark values. At the time, that policy, people were importing to our ports, but they were not able to clear their goods. So their ports were not competitive. So this policy came in to reduce the import duties for importers so that they will be able to clear their goods. So when you get more people clearing their goods as a result of this policy reducing the values, then you could get more people, importing them. So you are dealing with trade volumes. And as you do that, you're able to meet up for your taxes. So government was looking at that benchmark policy, a reversal of it. There wouldn't be any, benchmark values for, importers again. Importers are going to pay the full amount of import duties that they ought to pay. So these are some of the policies that government was trying to do to be able to make up for that 37 billion deficit in the budget. And next slide. So aside the first three that I have talked about, the key thing is imposing electronic transaction levy, which is e-transaction levy of, this is the budget. At the time when they first presented the budget, they said that is government saying that they are going to impose 1.75% on the value of digital transactions and exempt daily transactions of an accumulative value of 100 cedis or less per person. The recommended effective date of implementation was 1st January 2022. So as part of revenue, raising revenue, government brought in E-Levy, which is electronic transaction levy. And then that is one of the key revenue measures. The last one was zero rate toll. So all public tolls, when we pass through our tolls using your vehicles, you don't pay any toll over there. But the key thing that is our highlight or our climax for our presentation today was the E-Levy. Now, when the E-Levy was presented to Parliament, we all know how Ghana, our Parliament is a hung Parliament, meaning that they do not have the majority to be able to pass some of these bills. So the e-levy was shelved due to the numbers of minority and then majority. It came back again, and finally the bill has been passed, and now we have the act. But in the time of the budget presentation in 2021 November, the rate that they proposed was 1.75, but at the moment, e-levy is 1.5%. So what was the e-levy meant for? Government was saying that they are going to use to support road infrastructure development, and then also going to increase public transportation system, including purchases of some government buses or public buses. Our next slide. Yeah, so let us look at the law. What I was discussing was the time the budget was read. Now it has been passed to, an act. So what is the law? The law is saying that imposed electronic transaction levy of 1.5% on electronic transfers. The levy shall be charged on electronic transfers at the time of transfers by entities listed in the first schedules as follows: electronic money issuers, payment service providers, banks, specialized deposit taking institution, and other financial institution. So the law came in, finally, Parliament did their thing, they did the back and forth, they debated, majority had their way, and then they passed the bill into an act. So at the moment, the law is 1.5% on electronic transfers. So if you are transferring money over the electronic medium by an individual, you pay that electronic transaction levy. And then the people to tax, or the people to implement the taxes on behalf of government, is the EMIs, which is the electronic money issuers or payment service providers, such as the MTNs, that's the telcos, and then some banks or specialized taking deposit institution. Our next slide. The law has been imposed, and then it is 1.5%. So we are looking at taxable transfers that we do that are being taxed for the purposes of e-levy. So number one, mobile money transfers done between accounts on the same electronic money issuer. So if you are transferring money from MTN to another MTN, the tax will apply. Mobile money transfers from an account on one electronic money issuer to another recipient of another electronic money issuer. So here you are doing mobile money transfer from a telco, which is MTN, to maybe Vodafone. That one to the e-levy will apply. It will tax you the 1.5%. Then transfers from bank account to mobile money account. So you move some of your money from your bank account to your mobile money. The law will also apply. Transfer from mobile money. So the reverse is from mobile money to your bank. If on your phone, you go on your mobile money account and you want to transfer money from your bank, from your Momo account to your bank, the law will also apply. The final one is bank transfer. So anytime you are making a transfer from your bank, or you authorize your bankers to transfer money to make any payment using the digital mean, you pay 1.5% e-levy. So these are taxable transfers, that is transfers that e-levy will apply on them. Next slide, please. So let us look at exempt transfer, that is the avoidance part of the tax. If you do not want to suffer e-levy, what do you do? Number one, a cumulative transfer of 100 Ghana cedis a day made by the same person. So all transfers from 0 to 100 cedis are exempt. It means that you can be sending 100 per day if you want to do a transaction, and then you want to avoid the e-levy. A transfer between accounts owned by the same person. So if you have registered and then you are transferring from your account to your same account, so maybe it could be from your Momo, that is from your MTN Momo to your Vodafone, or from your bank in maybe Commercial Bank to Barclays Bank, or Barclays Bank to Agro Development Bank, and it is the same person, the law will not apply. So it means there's an exempt transfer. A transfer for the payment of taxes, fees, and charges on the Ghana.gov system. So the Ghana.gov system is a platform that recently, government put in place for people to file and then pay their taxes So once you are using that system to also file and then pay your taxes, the law will not apply. Specify merchant payments, which I use a lot these days. All the merchant guys are exempt. So once you go to your merchant and you ask them to transfer for you, it attracts 0 e-levy or no e-levy. So if you want to avoid the tax, then you use merchant payment. If you go to the malls and then you are shopping, buying your groceries and all that, instead of transferring directly on your Momo account, you ask for their merchant ID and then you transfer, and it will attract no e-levy. Transfers made between principal and then agent and master agent. And then finally, electronic clearing of checks. If you are using checks to pay for goods and services, e-levy will not apply. So I'm bringing my today's discussion on some recent taxes in Ghana. We are talking about the e-levy, which is the recent one, the most recent. The impact as I've put here will come through our discussion. What is this law going to affect the ordinary Ghanaian? Is government going to raise the intended revenue that they are expecting? Now, at the time of the implementation, government was looking at raising 5 billion out of this e-levy. The purpose was that they were looking at the trade volumes of transactions on electronic transfers. And then, as reported, Momo transaction hit a value of about 500 billion. So government was anticipating that if you do the math, if they get 5% of 500 billion, that is 10% of 500 billion, then they'll be making that 5 billion, that is raising 5 billion from trade volumes of Momo or online or any digital transfers. So that was the anticipation here brought in the e-levy. So without much ado, I bring my section to a close, and then I will take questions, and maybe the questions will help us to do the discussion about the impact on our recent tax, which is the e-levy on the ordinary Ghanaian. Thank you very much, Christian. Thank you very much, Eva.
I want to thank everyone for your attendance. Once again, I would like to apologize for the slight technical issue at the beginning. Just to recap, I will be sending the slides, the recording within from 24 to 48 hours. I want to thank once again Christian and Julian for joining us today. And also, before we end the webinar today, I would like to draw your attention to our upcoming two events, the Birmingham conference, which will be on the 23rd of June, as well as the upcoming quarterly financial report run by Matthew, which will be on the 22nd of June. If you wish to join, please go to our website and proceed forward. And other than that, we'll be having the tax series later in September, and keep an eye on our website. I wish you a pleasant afternoon here in UK, and then maybe late afternoon in Ghana, and we'll be in touch very soon. Keep an eye on our website. I wish you a lovely weekend.
Okay, thank you very much, Julius, and thank you very much, Eva. I think there are no Q&As, all have been understood. So thank you. We are going to arrange a special session for our tax series, and then we'll communicate the time to all members. As Eva had already indicated, the slides are going to be shared. And then this was just a tidbit of what our tax system currently looks like, and then what is new, as most of us are not abreast with the new provisions and new things that are ongoing in our tax system. So we are especially going to arrange a tax series of which each of the topics discussed is going to be taken as an individual topic to be extensively elaborated on, especially with regards to VAT, filing of VAT, filing of withholding taxes, and then our income taxes. Most of us are interested in how we are going to get the tax holidays with regards to we are going to claim some of our income tax. I think we are paying too much. I didn't know that we have some criteria you can meet to reduce the tax you are paying. So I think we will take each of these topics, and then we are going to extensively look at how they affect our day-to-day activities as accountants and individuals, how we are going to use it in our daily lives. Thank you so much. Thank you very much, Julius, and thank you all members for attending this very important discussion. We are going to meet again in 23 days' time. We have another session, and I'll communicate the session to all of us in the course of next week. Thank you, and then enjoy the rest of your evening. Bye-bye.